time frames and literally work your way down so that you can justify everything that you do on the lower time frame with the higher time frame narrative. So daily time frame is bullish, so I'm expecting us to trend higher. That's simple. 4 hour time frame has retraced and now it's expanding. I'm expecting us to trend higher. Hourly time frame has done what? Also broken structure and broken structure back up. Now, yes, it is bearish and market open, so we need to invalidate that. So from here, we actually scale down further on the time frames, right? What does that mean? We already confirmed that the hourly is what? Bearish. Sorry, bullish. But when we came into trade this morning, we knew that the hourly was actually bearish. So coming into market open, we need to invalidate the structure that has been formed. That means that we need to invalidate the bearish structure to validate the higher time frame and 4 hour bullish structure. How do we do that? With 15-minute breaks of structure. So we start to see it here. As market comes into here, we notice that we get hella 15-minute break of structures, but that's not enough. We need to see bearish side take control and then that control get flipped. In other words, we need to see bearish enticements and then liquidations of those bearish shorts to therefore see the longs expand. Does that make sense? So with that being said, what do we do when market opens? So we want to look for market flipping bearish and then see the enticement of those sells and the stopping out of the early buyers for us to actually step into the market. And where do we see that? We waited and waited here and said, okay, boom. Why here, right? You're probably wondering, how did I just choose this? Well, experience, yeah. Also, I know that this 5 minute candle right here looks like a break of structure to many people who don't know what. And more importantly, I know that this giant candle here enticed many sellers. People who were long got stopped out here. So what really matters here is that we know that the 15 minutes bearish, and I've seen the liquidations happen now, and I know that the fake outs are happening. So at this point, I just need to find bullish confluences. This is the final piece of the puzzle. The vision that I was just talking about. We pretty much see this, right? The liquidation. Now we have to gain conviction in market actually shifting. So how do I gain that conviction? I see that this right here is a bearish order block, right? Price comes in, taps into it. We want to see if it's going to invalidate or validate it. How we know this is we want to see where the reactions are. What does that mean? We get the bearish reaction off of the liquidity sweep right here, right? So we get boom, liquidity sweep, break of structure. Order block gets reacted off of. Now we react off of the bullish one. So we want to see which one's going to get validated, which one will get invalidated, correct? This fair value gap, it's a very small fair value gap that forms right here. Very small, nevertheless, gets invalidated. Boom, first bullish confirmation. So now I have a break of structure, liquidity sweep, bearish invalidation, and then I have a bullish push into the engulfing of that fair value gap. Now I'm saying, okay, now all I really need to know for one piece of conviction is see how we react off of this fair value gap, of which I pretty much enter off of. So my stops go under there, and I pretty much execute from there, and the rest is history. Banger of a trade. Not that hard. And we literally did the same thing last week. This secured the Discord like 4.2 R. I secured 4.5 R, but that's because I sized up a little bit. But here was the other trade that we literally took last week. Also another banger. On which chart is it? It's on this one, yeah. So this is last week, right? GU is bearish, right? It hasn't yet flipped bullish, so we don't know this bit. So we're here. And I know that GU is bearish, expecting a continuation, correct? So I see that the daily gave us a retrace, and now we're going lower. So this is the candle that I'm talking about here. So I'm expecting here. 4 hour is what? Bearish. Price is coming down. Now, is it confirmed? No. There are no bearish breaks of structure. So what do I need to confirm this? An hourly break. Like I said, if one time frame above is down, you confirm with the time frame below it. So now then we are actually going to go ahead and confirm and invalidate that 4 hour bearish looking structure, which is still bullish, with hourly structure that's bearish. Then we can actually go ahead and take a trade. So how do we do that here? Boom, hourly expansion, right? So what is this? A break of structure. So what does that mean? The 4 hour that looks bearish can be considered bearish because the hourly is bearish. In anticipation of a 4 hour new expansionary move, we see that, we not only get a break of structure here, but we get a retrace into a perfect 618, right? So now coming into market open, we know that the 4 hour is good to go, the 1 hour is good to go, the daily is good to go. Everything's saying that we're good to go short. 15-minute is also validating our short position here. 15-minute structure flips bearish. Now I'm just saying, boom, I'm good to go. 15 minutes good, hourly's good, 4 hours good, daily's good. Now we see down to the 5 minute. Like I said earlier, we want to see what bullish structure form in the opposing direction on the execution point time frame so that we can execute off of that liquidation of traders who are trading in the wrong direction. So what happens in market open? We're 5 minute bearish, right? Just like everything else, but we flip bullish right here. Now I'm like, perfect. All I'm waiting for here is a flip in structure. Where do we get it? We get it right here. 5 minute goes bearish. There goes your break of structure. At which point now I'm like, awesome. The people who are longing are getting stopped out. The people who were short just got stopped out with this move here. The people who are long are gonna get stopped out when we expand lower. Now I just want to see a retrace into a premium point within price action, i.e. an order block. So what do we do here? Go ahead and look at the order block. Not that hard. You understand what I'm trying to say? Invalidation of opposing direction followed by validation of the correct direction that you've seen off the higher time frame will result in higher win rate because you're going to enter off the liquidation of people who are trading in the wrong direction, and that gives you a higher chance of actually making money. So what do we see here? Boom. We see price break structure, right? From that retrace. Now it creates a fair value gap, right? Multiple actually. So because it just expanded, I'm looking for my execution point. It expanded so much, so I decided to say anything above equilibrium would be a good enough entry for me. I see a perfect 618 retracement, and then I see a bearish engulfing. At which point I'm like, awesome, I'm good to go. Put my stops under that, take profits, easy, secure 3R, great finish of the week. So it's the same thing that I say. This trade is literally another application of the same exact thing that I explained about the gold trade that we talked about today. It's literally the same thing. So I'll see you guys in the next one. Join the Discord because I send all of these trades out in advance and make some money. And more importantly, join my calls because they're completely free and they're there to help you.